currently the retail sector is pretty sluggish. We've seen a slowdown pre-election, as we normally see in federal election cycles. We see a slowdown in retail sales. We saw that again. We have seen a short-term bounce post the election being out of the way, consumer confidence going back up again in ever so slightly with the government being re-elected. But we're expecting going into Christmas for a fairly flat period, not a huge or a hugely successful Christmas for a lot of retailers going into the next couple of months on the back of low interest rates. They're just not having that same bite that they've had in previous cycles. It's very sector specific and company specific, and so certainly companies like RCG and Nick Scali, who've got really strong rollout stories benefiting from the strong housing market, particularly Nick Scali, are doing quite well. And on the other end of the spectrum, you've seen companies like Myer, Report, Premier Investments, majority of their brands doing quite poorly, with Smiggle and Peter Alexander being clear standouts from a longer term perspective. So it is very, very mixed, and it's not and Reject Shop's another one which put out a slower like-for-like figure than some people had expected back in the August results. So it very much is company specific currently in retail. Online retail sales growth, the rate of growth is slowing off a low base. So certainly it is maturing, and we've seen particularly a lot of retailers in Australia evolve their offering in online, it's becoming more sophisticated, catching up. We are a few years behind some of the larger retailers in the US and Europe who have certainly do a great job in the online space. So certainly the rate of growth is slowing in the online retail space, and we'd expect it to represent a growing part of the overall consumer's wallet. Generally, if you look at the US, it's roughly 10 to 15% of overall retail sales, and we think that's where we're going here in Australia over the next 5 years. Generally, in the last 2 years, the online retail pure plays that are listed on the ASX have been performing quite poorly. Kogan, Surf Stitch, Temple and Webster have really bombed out post-IPO and have really struggled, and generally struggle to make money. So it is very, very tough, and we are thinking that a good mix of online with bricks and mortar stores is really the way forward in the next 5 to 10 years. But certainly we remain quite cautious on any pure play listed online retailers that come to the market. We're underweight the retail sector at the moment. We think we're approaching a very sluggish Christmas trading period. Certainly we've had interest rate cuts which are failing to really stimulate consumer sentiment and drive retail sales growth the same way they have in previous cycles. So we are quite cautious going into Christmas. Generally retailers have put their orders in already for the Christmas period and are generally not anticipating a huge Christmas. The other key thing with Christmas this year is a later Christmas, in the sense that Christmas Day falls on a weekend. So you might start to see that late rush in that last week into Christmas. So the retailers will be crossing their fingers all the way into Christmas Eve.